Hi there, this is Gloria Heck with the Gloria Sells Real Estate Team. Today, we are going to review our market update for March 2023. So hang on. We started off the year sort of seeing good buyer demand along with good activity in the market. But in the first part of February, we started to see the market dip a little bit. Then, as we start to hear more uncertain economic news, inflation, higher interest rates, and people start to think, well, maybe we're not as far along in the fight against inflation as we thought. As interest rates continue to climb, it's caused a lot of panic in the market and a lot of uncertainty in real estate, with interest rates now at over 7%. So I just want to remind you that interest rates are influenced by the 10-year Treasury. If you look at this 30-year fixed mortgage rate, this is the same graphic as before from some of the other market videos I've shown you. But in the bar chart, you'll see a line there, and the line being the 10-year Treasury yield. Interest rates are going to follow that, and they follow that straight up over the past 30 days. Sam Cater from Freddie Mac said, "The economy is showing signs of resilience, mainly due to consumer spending and rates increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist." Some of the tools that we can use to combat the interest rates are adjustable rate mortgages and, of course, the seller paid buy downs in this market. And I'll explain what those buy downs are in another video, so check that one out. I think these tools are more important than ever to help us get through this interest rate challenge that we're experiencing right now. With so much doom and gloom happening around the country, let's discuss our sunny situation here. Let's talk about what's going on in our local market of Southeast Florida. The latest numbers that we have are actually from January. What we're seeing is fewer closed sales year over year, with the range of 33 to 41% decline in the Tri-County area. What that means is that there are fewer buyers in the market, which is a direct result of the increased interest rates. Interestingly enough, the number of buyers who are coming to our market and purchasing in cash is about the same number that we saw last year. While everyone is concerned about a market crash and prices going down around the country, that's just not the case here in Southeast Florida. Prices are up almost 5 to 11% in the Tri-County area year over year. CoreLogic research says that price increases in Miami are up 17.3%, which is the highest for any large metro area. The median price of a single family home in this area is going to range between $540,000 to $582,000, depending on the county. A big difference from last year's range of $500,000 to $526,000. We're also seeing that overpricing a property is no longer working as a strategy for sellers. Houses are now selling for 93 to 95% of their listing price. It's a big difference from last year when sellers were getting 100% of their asking prices. Houses are staying on the market longer with the range of 39 to 41 days, which is way up from 15 to 24 last year during the same time. Around the country, markets are still feeling an inventory crunch with not enough homes in the market. However, we are now seeing anywhere from 3 to 4 months of inventory, when last year it was only 1 month of inventory. This means that we have triple the amount of properties for sale that we had compared to last year. So there's plenty of choices for home buyers. While inventory has risen year over year, it's still below where it was in 2019. This graphic right here does a great job from Realtor.com showing the active monthly listings in the last 7 Februaries. 2023 compared to all the way back to 2017. I think this is an important point, and I want to pause here for a second to say this. Anytime you're looking at numbers right now, you can't compare 2021, 2022. You've got to go back to pre-pandemic times, which are the normal times in real estate. 2017, 18, 19, and you see 577,000 active listings in February of this year compared to over 1 million in the years prior to the pandemic. So significantly less inventory across the country, and we know we need more. Interestingly enough, while inventory has increased in Southeast Florida, we're still seeing an increase in values, which is good for sellers. This is an important factor to consider in this market. We may see values come down, but we haven't yet. It could be because we live in a highly desirable area of the country with amazing weather, no state income tax, and lots of housing options. Here's the question I get asked often. Should I buy a home right now? Is it cheaper to rent, or should I buy a home? 3 things that are important about understanding this question. First of all, rent always goes up. This graphic right here shows a median asking rent since 1988. It's always gone up. In the last couple of years, it's gone up dramatically. When you buy a home, your mortgage payment remains fixed. It's important to remember that rent goes up, but with a mortgage payment, you can bring some stability to that part of the largest expense of everyone in their household budget. It's the mortgage. Okay, so the second thing is that prices go up. Well, let's look at this. This is the Home Price Expectation Survey nationwide as of the 4th quarter of 2023. They're projecting 1.3% depreciation in 2023 nationwide. In Southeast Florida, we're not seeing depreciation. If you wait for prices to come down and you wait for interest rates to come down, what do you think everybody else is going to do? Let's see. It's almost like Black Friday at Walmart. You aren't getting in the store. And if you do get in, you're getting in a fight. That's the bottom line. There's an opportunity now with so much more inventory for buyers to choose from. We can say confidently that homes go up in value. Rents always go up. You can secure your payment, your housing payment through buying a home, and it's an appreciating asset. Okay, this is important. This is the third point. That home ownership is a builder of equity. We take the home price expectation survey. We take an average price of about $400,000. In 5 years, you'll have $50,000 in equity. We are now in a much more normal real estate environment than we had been in the last 2 years. And really, my job is to help people make powerful and competent decisions, educated decisions. Also to show you the facts, because there are a lot of people right now that are saying it doesn't make sense to buy a home. The real estate market is in trouble. Homes are going to lose 20% in value. The thing is going to crash. And people, it's just not true. The numbers don't support this fallacy, this fear that you see going around. It just is not reality. Homeowners now have equity. Let me start with this quote from Adam Data. It says, 48% of residential mortgage properties in the United States were considered equity rich in the fourth quarter, meaning the combined estimated amount of loan balances secured by those properties was more than 50% of their estimated market values. That's huge. Homeowners have significant equity. They've gained it over the past couple of years. They've earned it over time. They may have more equity than they realize that can fuel their move if they choose to move. If you're thinking about moving, it's important to look at how much equity you have in your home to see if it makes sense to move. This is the 2022 third quarter CoreLogic Homeowner Equity Insight Report. And what it shows, that over 1 year alone, homeowners gained an average of $34,000 in equity. And that's year-over-year percentage increase of 15.8% for U.S. homeowners with mortgages. These are big numbers. A lot of people are worried now in this moment of a little up, a little down on home prices that could impact their equity. What we need to remember is that home ownership, it is a long game. When we talk about homeowners sitting on significant equity, it's far more than just what they've earned over the past year. We know this varies by market, but let me go ahead and show you this map, which I think really tells a great story. This is the percentage change in home prices over the past 5 years. On average, how much home prices have changed in the past 5 years? The national average is 58.4. Home values have increased almost 60% over the past 5 years. Anyone who has been in their home for 5 or 6 years, they're looking at 60% increase. Now, if you look state by state and look at our local area, you can see that it really varies significantly by state. But homeowners likely have more equity than they realize. We know that home ownership wins over time. Home values, whether they go up a little, down a little, in any given period, they eventually recover. And I want to share with you next is exactly how that lays out over the past 30 years, because the percentage change in home prices over the past 30 years, since 1991, a little bit more than 30 years, 289% on the average for U.S. homeowners. Now that's almost a 300% increase. Think about it for a minute. If someone has been in their home for a significant period, they're sitting on significant equity. For the homeowner who wants to downsize, maybe be closer to the family, look at how much equity you're sitting on. This will vary by market, but a lot of people are worried about selling right now because of where we are in this moment. If they saw that their neighbor sold their home for significantly more, maybe 30, 40, 50,000 more than what they can get right now, or even a few months ago, we've got to look at the long game. Look at the long game of home ownership and understand that over time, home values are going to recover and continue to grow. This is what happens over time. There was a lot that was happening in the housing market over the past 30 years. There were some real highs and some real lows. We can learn a lot from what's happening in the housing market over time. Don't feel like you're stuck by what you're reading in the news. I hope that I've shed some light on what's happening both nationally and locally with real estate. Thank you for watching. If you like what you see, I hope you will subscribe to our channel so you don't miss anything, and check out some of our other videos.